This is task 9 from the first sample assessment of business tax. So task 9 is about trading losses. Now the complication with trading losses is that the rules are different for companies and individuals. So you do need to pay careful attention to this. The reference materials provide information on how to deal with trading losses, but the information in the reference materials often considered by many students to be a bit unclear, so you do need to make sure you're comfortable with the rules. In our learning materials there is a summary which may help you to get your head around it a little bit more easily. So let's have a look at the information they've given us, but we look at the requirements first. So in part A it's asking to identify how much loss will be used in each period, and this is provided as a written box. So it's not asking us to explain anything, but given that it is a written box, it looks as if the credit will be given for showing workings, even though perhaps you might not get it perfectly right. So this is good news for us. There's some flexibility for you to earn more marks here. Now the other thing we need to look at is the other information they've given us. So let's have a look at this now. A company has been profitable for many years. In the year ended 30th of June 2024, a legal action was brought against the company claiming that its products were unsafe. This resulted in a significant drop in sales. In August 24, so a couple of months later, the company won the case and saw a slight increase in sales, but it is likely to take some time to rebuild public confidence. So you've got the company's trading profits, chargeable gains, and qualifying charitable donations. So there they are in the table below. So we can see in the year to June 23, so yeah, we had some nice profits, some gains on sale of assets, but we made some donations to charity. And then in the year when we were sued, you can see we've got those big losses there. Still a few gains from selling assets, and we made some donations then. And then in the year that we were recovering, so we got some profit, but not a lot. But we have got quite a few gains, but we didn't make any donations this year. Then just below that, so here's the key part. The company wants to claim loss relief as early as possible. Now that's a significant statement because in the HMRC guidance, there are two things that we can do. We can carry back losses or carry forward losses. And what we're going to do will depend really on what we want to achieve. If we want to get cash as quickly as possible, then we need to carry back the losses. But if we do that, we will lose the benefit of relief from those charitable donations. So while we'll get cash quickly from HMRC, we may get a refund for the prior year, but it means that overall, over the 3 years, we may pay more tax. Whereas if we carry forward the losses, then it will delay when we receive the cash, but because we can use those charitable donations, it means that overall we will pay less tax. Okay, so we need to balance here. Do we want cash early, but suffer paying a little bit more tax? Or can we wait to offset losses against future years, but in that case benefit by paying less tax? But in this case, they want to claim the loss relief as early as possible. So that's telling us that we want to carry back the losses. So here's the information that they gave us in the table, but we've just put it on our bit of scrap paper so we can try and work out what's going on. So we've got the 3 years, and you can see we made that loss in the second year. But what we're going to do though is just put that loss to one side. So we need to understand, what's the running total of how much losses we have used to relieve against profits and how much is still available for us. So if we want to get loss relief as early as possible, then what we need to do is use that loss against any gains in the same year as when the loss was incurred. So what we want to do then, we've got gains of 12,000 in the loss-making year. So I want to use 12,000 of my losses and immediately offset that against the gain that we made in that year. And that means now we have 0 profits available, and therefore we cannot use any of those charitable donations to pay less tax. And the next thing then, again, I want to get refunds from HMRC. I want loss relief as early as possible. So having applied losses to the current year, I now want to apply them to the prior year. So we're doing current year first and then prior year second. So we can see that we have total profits of 443,000 and gains of 24,000. So we have 467,000 of total combined profits. So I want to use 467,000 of my losses to offset this amount. Again, that means that we have 0 profits, and therefore I cannot benefit from those charitable donations. Remember, if we want refunds from HMRC, then we suffer that we cannot use the benefit of those donations. Okay, so how much of our loss do we have left then? So we started off with 580,000. So we take off the 12,000, take off 467,000. So we have 101,000 of loss available. And then we can carry that forward. So how much profits do we have now? So yeah, we're going to carry this forward. This is the third thing for us to do, carry it forward to the future. So at the moment, we have a combined profits of 36 and gains of 98, giving 134,000. So I can use the full amount. I can use my 101,000. So I've used all my losses now to reduce my profits down to 33,000. And then we'd pay tax on that. Now, what isn't clear in this particular question, so let's do a bit of revision here. Let's suppose that we did make some donations. Okay, let's suppose that we made £5,000 worth of donations. Oh, no, let's just choose another number. Let's suppose we made £35,000 worth of donations. Okay, now if we're carrying losses forward, we don't have to use all of the loss. Okay, what we're allowed to do is limit how much loss we use so that we can use those qualifying charitable donations. So if we only use 99,000 of our losses, we still have 2,000 losses to carry forward until 2026. But it means that with our 134 of total profits, we deduct the 99, and then we can deduct our qualifying charitable donations, leaving us with 0 profits and therefore no tax to pay. That didn't apply in this particular question, but we thought it'd be useful just to revise that as part of this debrief. So for our answer then, so we start off by offsetting £12,000 against total profits in the year to 30th of June 24, the year in which the loss was incurred, and this reduces profits to nil, so the QCD relief is not used. Then we offset 467,000 against the total profits in the year ended 30th of June 23, the prior year, and this reduces profit to nil again, so QCD is not used. Remember, the question said that they wanted to claim loss relief as early as possible, so that's why we're carrying back the losses. And then finally, we offset the remaining 101,000 against total profits in the year ended 30th of June 25. The following year, here we're carrying forward, remember, and this reduces the profit for that year to 33,000. Okay, let's look at part B now. So the required asks us to explain the loss options available to Sooty, including a recommendation for the most appropriate option for Sooty. You do not have to complete calculations, but should use numbers to support your response. So Sooty has been employed as a marketing manager for many years, earning an annual salary of £45,000. At the end of March 24, she left her job, and on 6th of April 24, took a part-time job in a cafe earning £10,000 per year, and started her own business making and selling prints and artwork. Sooty incurred significant initial costs purchasing materials and advertising on social media. As a result, she made a loss in the year ended 5th of April 25 of £98,000. She expects that she will now be profitable and will make profits of approximately £30,000 per year in all future periods, as well as continue to earn her £10,000 salary. In the reference materials, we've got guidance for individuals, and for individuals it's a bit more complicated compared with companies, because you can choose the order in the years that you want to offset the losses against. For companies, it's a bit more rigid and a bit more sort of straightforward to apply. So we can see that there's a choice to be able to carry forward the losses, or apply them against the current year, or carry them back, and we can do them basically in any order that suits the taxpayer. But we do need to be aware that if we apply it against the current year or we carry back, then it means we may lose our personal allowance. So we saw earlier on, didn't we, that for the company they may lose their charitable donations, and the same applies here, that if we want our tax refund, if we want our cash back quickly, then we may lose personal allowance. So we know in this case that Sooty has a salary of £10,000, and at the moment that is below the personal allowance, so Sooty would have to pay zero tax on that salary. So if we use the 98,000 loss and offset against that, that means that the 10,000 would become zero and there'd still be no tax to pay, but it means that we would have used some losses unnecessarily. So here's our first comment. So remember, the question was asking us to explain the loss options. So one of the options is to use the losses in the current year. So £10,000 of the 98,000 losses could be offset against Sooty's salary, but Sooty doesn't have to pay tax on her salary anyway because it is below the personal allowance. So this would effectively just waste some of the loss relief. So the second option is that she could use loss relief in the prior year. So remember that she earned 45,000 in the prior year. So she could use 45,000 of the 98,000 loss and offset it from the prior year. But remember, when we offset against the prior year, we lose the benefit of the personal allowance. So remember that 12,570 of income would be covered by the personal allowance and there'd be no tax to pay on that. So that means that if we're offsetting loss against that 12,570, we'd pay no tax, but we wouldn't be paying tax on it anyway, would we? So that means we would lose the benefit of that personal allowance. But on the plus side, she would get a tax refund for the tax paid on the 45,000 in that prior year, and that would have been paid at the 20% basic rate. The next choice would be to carry forward the losses. And remember, we can do these in any order. So if that were the case, then we'd apply them against future profits of the same trade only. And this happens automatically to the first available profits. So we're told in the question that they're expecting to get 30,000 of profits in future years. So if you're going to carry forward, we'd use 30,000 of the 98,000 loss to offset against profits from the same trade, her print and artwork trade. So she's still getting salary of £10,000 and she'd use her personal allowance to offset that. So yeah, there'd still be the 2,570 of personal allowance that would be wasted. Yeah, there's still some wasted personal allowance here, but it wouldn't be as much as if we carried back the losses. Yeah, so we use the personal allowance against the cafe income and we use the art losses against the future art profits. Now what's also useful in the reference materials, if we scroll down a little bit, we also can think about opening year loss relief. And this is relevant because remember, Suti's just started her business. So if we do that, we can apply our losses against total income of the previous 3 years on a first in, first out basis. If opted for, losses will be used to reduce total income as much as possible in each year and cannot be restricted to preserve the personal allowance. So if you're going to use the opening year loss relief, we could use 45,000 of the 98,000 loss to offset against the salary earned in 21-22. Remember, we need to do this on a first in, first out basis. And it's also an all or nothing basis as well. So yeah, we'd be losing personal allowances, wouldn't we? So yeah, we'd wipe out the 45,000 salary earned 3 years ago. And then we use another 45,000 to wipe out the salary earned 2 years ago. And then we've only got 8,000 left of the 98,000 losses. So we could use that against the salary earned last year. So personal allowances for the first 2 years would be wiped out, but we'd still have personal allowances for last year's salary. Now the question is asking for a recommendation, so we need to choose which of these we would prefer. Well, it really depends on what Suti wants to do. So it's similar to the company. If Suti wants cash quickly, then the opening loss relief will be good because she'll get refunds for any tax paid in the prior 3 years. So money will come back into her business quite quickly and she can use that for growing her art business. But that would lose those personal allowances. So if that's more important, if she wants to use more of her losses, then she'd want to carry those forward so that she can at least use her personal allowance against the 10,000 salary from the cafe. So in summary, the opening year loss relief is best for cash flow. Carrying forward minimises the wastage of personal allowance. Okay, but we do need to bear in mind though that will Suti make any profits in the future? So we could be carrying forward the 98,000 forever and never really use it.